what's up? We are back with another stock analysis, and today we will be looking at Bumble. So, Bumble is a dating app. Um, that's about it. That's all they really do. Um, haven't really heard too much about them recently, but they did, I believe, put out earnings fairly recently. I could be wrong there, but one of the biggest things with them is their stock has been declining almost nonstop since they IPO'd. So it's really just about where does their kind of intrinsic value line start and when will they hit that and hopefully bounce off of it, or are they just going to get delisted at some point? I don't really know. It is a legitimate company. They are showing a little bit of growth. But either way, let's get into it. Make sure to subscribe if you haven't. And yeah. So starting off with Bumble, they actually have two mobile applications, Bumble and then Badoo, which I'm almost 100% confident is literally just the China version. And if we go to geographic revenue, we might be able to see it. And yeah, so mainland China is about 12% of their total revenue. I am 99.9% sure that Badoo is just their China version of the app. Could be wrong there, but I don't think I am. Anyway, getting into some industry metrics. So total paying users, they are expecting a slight decline first quarter of 2025, but after that steady growth, or at least fairly steady growth throughout the year, and ending the year right around four, actually slightly less than what they're seeing in the end of 2024. So overall, not great there, actually. Average revenue per user also is expected to decline from 2024. Total paying users, North America is expected to decline throughout the year. Total paying users international is expected to increase. So anything optimistic really about the company is really being shown through their international segment. It seems like in North America, they're getting beaten out by some other things, which I did just go over Match Group probably about a week ago now. If you want to check out that video, that is on the channel. But they seem like they were doing fairly okay, if I remember correctly. But I would say they're definitely beating out Bumble, at least in North America. Um, Monthly average revenue per paying user, I'm guessing is what the two P's are there. Looks like it is projected to go down throughout the next year. And then Bumble monthly average revenue per paying user is basically staying the same, slight decrease. Looking at the company as a whole, market cap is at 800 million. Target price is at 688 with no listed long-term growth rate. Right now we're at 520, so there is a little bit of projected upside there. Um, Other than that, we don't have too much crazy stuff in terms of the signals here, which honestly I almost never look at, but figured I would because there were four of them showing up there, but nothing really too important there. So also, new thing that I'm doing with my videos is I'm going to go through the earnings and the stock chart before I go into financials, because I feel like the financials can kind of get kind of boring, and I don't want too many people to click off before I actually get into any good information, which I'm assuming a lot of people do. So we're going through earnings first, then looking at their chart, then we'll go through some of the drier side of the financial statements and all that great stuff. But anyway, looking into it, revenue beat estimates. Badu came in slightly under estimates. Gross margin came in slightly under. EBITDA just about matched. Total paying users came in over, with most of the beat actually coming from Bumble, which is a little surprising, but also pretty positive. Total net ads, which I'm gonna guess is active users, came in under versus they were expecting to add 100,000, and then average revenue per user came in slightly above, which is fairly solid. And actually, most of that growth came from Bumble itself once again. So they're projecting to have positive growth internationally, but we're seeing better growth coming from the domestic side of it, which honestly is kind of mixed there, because if they're expecting more growth internationally, we would like to see growth across the board. Where if they're expecting a ton of growth in users but less profitability from those users, that could be kind of a double-edged sword there, where it might not be as good to have that many users but less money from them. Either way, we'll have to see how it works out. in the future with the company, but I would say there's positives and negatives to that side of the story, basically. Looking over the overview, shares were down 30%. Oh my God. From their quarter four report, um, beating EBITDA beating consensus by 1% with the margins slightly higher. Revenue came in slightly above, um, just below the higher end of guidance. So they topped out their guidance, which is interesting. Bumble beat by 1.4%. Total paying users beat. And oh, okay, here we go. Net ads came in negative for the first time in years against positive expectations. So that is why the stock dropped so much. They could have announced guidance as well, which would also definitely help with why it dropped so much. But either way, because those net ads were negative, which they have not seen in a very long time, that is definitely what caused the big drop. Um, Guided quarter one EBITDA for 2025, 10% below consensus, with revenue also 4.6% below. Paying users are expected to decline again. So this could honestly be a huge turning point with the company where not only are their users no longer growing, but they're now expecting less revenue as well on top of that. Um, 12 million headwind from closing. I don't know what these are, but I'm assuming they're just parts of their business that they shut down. Analysts were fairly disappointed, with most yearning for more visibility and results. So yeah, definitely makes sense. Now that they are losing users, I think we definitely want to see a little bit more being reported by them. I think Robinhood is the company where they report like their user information either monthly or maybe bi-weekly. I think it's monthly actually, or they report some kind of information a lot more often than just the quarterly reports. So if you want to read through everything here, you can pause. I'm just going to go through the price targets. So lowered to $7 from 8, lowers target, lowered to $6, lowered to 7, and also lowered to 7. Now that sounds like, oh, the price target's $7 and we're at 5 now. I think it's going to continue to get lowered, honestly. The consensus right now is at 743, which isn't great either way. And also, when they reported this, I don't know what price it was at when they reported it, but showed an 8.3% downside from 743. And if we look here, let's just go. Yeah, they dropped 30% day after earnings were reported, and they were at over $8 a share on that day. So we're in a whole new league of very, very low price ranges for the company. You could actually see they were increasing for a while, from the second half of 2024 all the way up until the beginning of this year. They were on a solid uptrend where they saw a ton of growth, growing from just under $5 a share to 8.5. So saw a lot of positive things there, and basically all of that growth is completely wiped out now, and that's not great at all. There's really not much to even analyze with the chart here other than just very strong steady downtrend. Company used to be worth 75 or $80 a share, and now there's just very little left there. Does not look great for them, honestly, in my opinion. But either way, some things to consider, which we will now get into going over the financials. So, first of all, $800 million market cap now. I'm assuming that's updated with the current price. At least I'm hoping, because $5 a share is a lot less than 8. But assuming that is the current valuation of 800 million, and it's not like let me think here, like 550 million, 30% lower. The sales multiples are still really solid. So quarterly, they're making 250 plus million. If we look at the fiscal years, they made $1 billion in revenue last year. And comparing that to their 800 or lower $1 million market cap, that's kind of insane to think about. And actually, I was just doing the thoughts in my brain, and this drop happened 2 weeks ago, so obviously it's going to be factored in. So the market cap is right around 800 million right now. Had to really use the brain power on that one, but either way, $1 billion in revenue, 800 million market cap. those kind of numbers don't really add up in the stock market very often, unless it's a company like Dollar General or something, which in my opinion is extremely undervalued. Now, is Bumble in the same position as Dollar General? Not really. But either way, I think there could be some positives here. But either way, also, there's just so much declines being projected here, and profitability is not looking good as well. They did lose $500 million last year off of that $1 billion in income, compared to the year before, where they just barely missed a net profit, from basically the same amount of income. So either way, does not look great. Total shares has gone down a lot. So did they do a massive share repurchase in 2024? I guess, but I don't really see why they would do that. But we'll get into that when we look at the cash flows for why that would happen. I have no clue. That seems like a terrible idea. But either way, cash has been declining for the past 2 years. Total assets has also been declining for the same period. Um, does not look great. If they're going to lose another $500 million off of their revenue, their cash runway is very short currently. Also, they have right around 600 million in debt, which isn't insane, but also isn't the healthiest situation either. If we look at their equity, it's not great. They're right around that 80% mark, at the end of 2024. So nothing really too good there, either way. But at the very least, they don't really have any short term debt. So that is something to consider. But now let's get into these cash flows and see what's going on here. So operating looks terrible. Um, Not really too terrible, honestly, but they, for whatever reason, had 2.4 billion in operating cash flow in 2020, but we're just going to ignore that. Operating cash flows look fairly consistent at the very least. Investing, not really too much activity going on there. Financing activities. So, okay, they have spent 360 million on repurchasing their stock over the past 2 years, but this makes absolutely no sense to me at all. Why would they possibly do that when demand is decreasing, especially in 2024 where they started losing their users? Um, that just doesn't make sense. That the sales growth is slowing down. Um, why would they put that money into repurchasing their stock? I have no idea. Um, Not great there. Debt has been getting reduced ever since COVID, which I guess is fine, but doesn't really matter too much. Just considering how small of an amount it's been for the past couple years. And free cash flow is still positive, which is something. But also it is positive mostly because of, let me see here. Um, I don't know. I guess just selling off other funds would probably be my answer to that. But either way, it does not look great here. The fact that their free cash flow is positive is a positive sign, but at the same time, it is not really because of their funds gained from operations, at least in my opinion. Um, Either way, I would say not great here. Just seeing that they're repurchasing their stock when their demand has decreased so much is kind of a slap in the face, especially to investors that want to see real, meaningful growth in the company. Um, don't get me wrong, repurchasing your stock is good sometimes, but when you're seeing the results that they've been seeing, it isn't. Either way, 2024, we did see some positive things. Not in their net margin, I could tell you that, but operating margin did see a ton of improvement, actually the highest they have ever seen. Reported gross margin came in just about in line with what they've been seeing for a while now, which is fine. Um, Other than that, I would say the biggest positive here is their operating margin was so high. That is fairly surprising, but again, they lost so much money with the net margin that either way, that's kind of rough. And then debt to equity, I did say was right around that 80% mark. It is still below it, so they still are in a healthy range for that metric, but just with the position the company's in, they probably are going to have to take out a lot more debt than what we're seeing right now. And in the near future, of course, not, they do have a lot of cash currently, but even still in the near future, they're probably going to need to take more out just to try to drive growth in the company. Um, and saying that, we're probably going to see this debt to equity ratio get higher and go into some unhealthy ranges, which will not be great for the company. So saying that, that is all I really want to cover for today. So if you enjoyed, make sure to subscribe. Let me know what you think about the video. Tell me what I missed. Let me know. And yeah, that's about it. So thanks for watching. See everybody in the next video.